There, fellow investors, if you've been following my journey with Chinese concept stocks, you know I love sharing updates on my holdings. So today, firstly, let's dive into the current performance of my investments and see what's cooking in the Chinese stock market. First off, we talk about the roller coaster ride we've been on. If you've been tracking the Chinese concept stock, you know that it's been a tough few months. At one point, my ETF took a nosedive with a staggering drop of about 30%. Ouch! But here's the silver lining. As a long-term investor, I kept my cool and continued to dollar cost average during the downturn. And guess what? My holdings are now almost back to even. Folks, let's be real. If my only goal is to break even, that's a bit sad, right? Of course, I'm aiming for a solid 30% profit. While I still have some climbing to do, I'm feeling optimistic and ready to hold out for the long haul. So my friend, recently have you noticed Chinese stocks are quietly making a comeback? The first to bounce back was no other than Xiaomi, which has been crushing it in the electric vehicle space. Following that, Alibaba revived its fortunes with a new partnership with Apple on AI. Talk about a power move. Then we had DeepSeek making waves, which helped lift a bunch of other Chinese stocks with it. If you want to get more insight of DeepSeek, you can check my formal video. Now, here's a $1 million question. For those wanting to jump into Chinese stocks, is the party just getting started? In this video, I promise you, all you want to know about Chinese concept stocks are in here. So stay tuned, don't leave. So the first topic today, what exactly are Chinese stocks? Well, simply put, they are companies registered in mainland China but listed on overseas exchanges like the New York Stock Exchange or Hong Kong Stock Exchange. Imagine them as international ambassadors of China's booming economy. The root of Chinese stocks traces back to the late 1990s and early 2000s. Back then, China's economy was on fire, but the financial market wasn't fully open. Many companies were itching to raise capital, so they took the leap and listed abroad. The first ever Chinese stock, the honor goes to Qingdao Bear, which made its debut on the Hong Kong Stock Exchange in 1993. After that, heavyweights like China Mobile, China Petroleum, and China Life Insurance followed suit, heading straight for the US markets. So maybe you want to know, why go global? Chinese stocks cover a vast range of industries, think tech, consumer goods, real estate, and more. These sectors often have a massive appetite for capital, which makes overseas listings attractive. Plus, many Chinese companies use a variable interest entity (VIE) structure. This clever setup helps them sidestep restrictions on foreign ownership in certain industries. It's like having your cake and eating it too. Now let's talk about why you might want to consider investing in these stocks. I list some of them. The first one is easy financing. These companies can raise funds more effortlessly on international platforms. Second, global branding. Listing abroad help enhance their brand recognition on a global scale. Third one is solid incentives. Many of these corporations have robust incentive structures that attract the top talents. And the fourth one is diverse opportunities. There's a treasure trove of investment opportunities across various sectors. And the following topics are more important. Well, let's take a look on the recent trends in Chinese concept stocks. As US tech stocks face high valuations and sluggish growth, Chinese stocks have started to show signs of low-level reversal. This shift is catching the eyes of international institutional investors, making Chinese stocks a hot topic for the fourth quarter 2024. Fast forward to January 2025, right as we celebrated the Chinese New Year, Chinese companies listed overseas have been putting up some impressive numbers. The launch of the DeepSeek R1 model at the end of January ignited a surge of interest among overseas investors in Nasdaq-listed Chinese companies. This buzz helped the Nasdaq Golden Dragon China index soar. This impressive uptick reflects a growing confidence in Chinese stocks and optimistic outlook on China's economic recovery. And from it, we can find so many big players making moves. David Tepper, known for bold stance of buying all Chinese assets, made significant moves in the fourth quarter last year.
China. Can't disagree with that either.
They're also, believe this or not, swap facilities to buy stocks. Want encouraging buyback of stocks. Encouraging buybacks. Not only encouraging it, lending you money to do it. And they're giving money like TELF money where you can put money out and you have no losses. That's a great deal for me. I want to be over there borrowing for some of this stuff.
Why would they be pursuing such aggressive measures like this?
Because they don't have another means of really stimulating economic growth in the economy, especially with the real estate market floundering sort of indefinitely.
They boosted their stakes in JD.com, Alibaba, Pinduoduo, and Baidu, and so on. Additionally, they increased their holdings in K ETFs like FXI and KWEB, which focus on Chinese large-cap stocks and internet companies, respectively. So how are we, common investors, getting involved in Chinese concept stocks? Here are a few common strategies. 1. Direct stock purchases. Large institutions like Hugh House Investments are actively increasing their stakes in Chinese concept stocks and engaging in a hedge fund operation. And number 2, you can use ETFs. Many investors are boosting their holdings in Chinese-related ETFs, which provide a diversified way to invest in this market. Just like me, I use QDII ETFs to buy Chinese concept stocks that are listed on the Nasdaq. Some investors are identifying long-term value in Chinese stocks and holding onto those positions, just like me. I hold my positions of the Chinese concept stocks nearly 5 years. And maybe some of you will ask me about what kind of stocks to buy to earn more money in the related Chinese stocks. Well, I think the foreign investment in Chinese stocks is concentrated on sectors like technology, e-commerce, finance, consumer goods, manufacturing, and services. These areas are ripe with opportunities, and I will be diving deeper into specific investment chances in my upcoming reports. So if you are curious about the in-depth analysis, you can check my report below. Well, maybe some of you know I'm a multi-market investor. Next question, how can we buying Chinese stocks influences and interact with investments in US stocks? Let's break it down in a way that both engaging and insightful. First off, let's talk about the perks of being a multi-market investor. The past few years have been a wild ride in the Chinese capital markets, with plenty of turbulence and disappointing returns. On the flip side, US stocks have been on a fantastic run, right? So you'd be wise to fish where they're full of fish. Now let's take a look at some macro strategies for multi-market investing. Since the pandemic hit in 2019, China's economy hit rock bottom. However, by the third quarter 2023, government initiatives to stabilize and boost the market have started to pay off. Many Chinese tech and consumer goods companies remain undervalued, especially compared to their US counterparts in the context of global inflation. Fast forward to late 2024, and innovations in AI like the DeepSeek model are redefining the investment narrative for Chinese tech stocks. The investment moves of Wall Street giants have also boosted the confidence in Chinese stocks, leading to a noticeable uptick. Remember, the essence of investing is to buy when others are fearful and sell when they're greedy, right? So naturally, what's the most critical ability we need as multi-market investors? Of course, it's macroeconomic analysis. Beyond just staying informed about current events, we need a solid grasp of macro analysis fundamentals. Okay, of course, I will be sharing more on this topic soon, so stay tuned. As we look at the current global economic landscape, changes in monetary policy like anticipated interest rate cut from the Federal Reserve and easing measures in China are shaping market dynamics. Historically, Chinese tech stocks have faced valuation discounts, but as their developments and innovation accelerate, their true value is starting to shine through. Here, I also want to tell you a secret. Of course, that is public secret. The importance of the leadership meetings. Let's discuss a recent pivotal moment. The meeting of China's top policymakers with prominent private sector leaders, including figures like Ren Zhengfei from Huawei and Lei Jun from Xiaomi, Ma Yun from Alibaba. This meeting isn't just another chart. It carries historical weight. Why I said like that? Okay, let's flash back to November 2018. Amid the US-China trade tension under Trump, at that time, a similar meeting was held to boost confidence, which marked the beginning of a remarkable recovery in the Chinese market. Fast forward to today, we're seeing paralysis, similar external environment, slow economic recovery, and a renewed focus on supporting private enterprises. This recent meeting signaled potential government actions aimed at revitalizing the private sector and boosting the economy. While history doesn't repeat itself, it does rhyme, and we might be on the brink of another significant market rally. If we can identify the industries that will benefit most from this change, of course, my friends, that doesn't mean that Chinese stocks don't have risks or challenges. It is undeniable that we've got policy risks and regulatory challenges. The scrutiny on Chinese stocks from the US is intensifying. The SEC has tightened its grip on disclosure requirements and audit regulations. This has led to increased risks of delisting or significant stock price fluctuations for some companies. Moreover, shifts in domestic regulations regarding internet and tech companies mean that these firms must constantly adapt to new compliance standards. This can be a heavy burden, especially for those that have faced issues like financial fraud or misleading information, which only add to market concerns about transparency. It also faces increased compliance costs, as well as the pressure of geopolitical factors. All of these businesses need to navigate a competitive landscape while also dealing with rising costs related to regulations. The competitive pressure is fierce, and the companies must continually innovate to maintain their edge. What's worse, they also need to face the currency and market risks. For instance, fluctuations in the Chinese yuan can significantly impact the costs and returns for foreign investors. Additionally, global macroeconomic conditions can influence the appetite for Chinese stocks. If we hit a slowdown or recession, risk tolerance typically drops, making investors less likely to dive into emerging markets. So listen to me, never forget about the risks. Well, where's the risks? Where's the strategies, right? Here's some essential tips for navigating the Chinese stock market. First and foremost, place a strong emphasis on fundamental analysis. When considering an investment in Chinese stocks, dive deep into a company's financial health, operational performance, and competitive advantages. This is the bedrock of equity investing, no matter where you are in the world, right? Next, keep a close watch on macro policies. Understanding the broader economic context and the regulatory landscape can provide valuable insights into potential risks and opportunities. And of course, diversification is key. Assess your risk tolerance and allocate your assets accordingly. Spreading your investment across various sectors. Finally, consider utilizing risk management tools. Setting stop loss and take profit points can help you control potential losses and lock in profits, allowing you to navigate the market more confidently. In summary, while investing in Chinese stocks presents a unique set of risks and challenges, there's still some potential opportunities for you to earn more money from it. So my friend, are you get ready to ride this wave this time? That's all for today. I hope it is useful as you are. See you next time, my friend.